Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, during the Wednesday session, the Australian dollar's rebound ended with much disappointment after giving back the gains made as the US dollar index, which measures the greenback strength against a basket of six major currencies, rebounded also after initially dropping back towards the region of 100.5060 and now recaptures the handle of 101 and currently around 101.12. We can see from the Australian dollar the market is continuing to pressure this support level seen at 65.90, and if we see a break there could give further indication to the bearish case and lead on towards the region of 65 cents, which is seen as a significant level because if we look back on the market we can see around 65 cents it did serve as a good resistant area, and before the break the market has respected and held above there for some time. Nevertheless, the bears are weighing on the market, so no doubt we may see this level eventually give, as the technicals do remain somewhat negative. Looking at the euro, the market took another challenge to that top side of 110.60.75 and was clearly rejected. From the rejection, we've seen a slight pullback, but nevertheless not backing away from that level. I still feel from a technical point that there isn't enough support or momentum to give or sustain a break above 110.75, and therefore I feel the market could eventually pull back towards this level of 109.25. Now a break here would confirm the bearish outside range days of two posted, that is, and therefore see a move back to 107. If the dollar index can regain its momentum further than that is above 101, and it should head on towards 102.50 as a potential target, that is, and therefore would see the slide further for euro. With the market jitters now coming back into play due to the recent banking saga in the US, we've seen a little bit of safe haven, that is yen strength against the dollar weakness, but still holding or respecting the region somewhere around the level of 133.30.50 area. We are seeing a bit of weakness into today's opening and therefore could see a move to 133.35, but the base now holds around 132.60.75. I still and believe the market will eventually recover and look back towards that top side of 134.80 and then maybe even further. Looking ahead though, on Friday we got the Bank of Japan's rate decision with no change expected as rates hold at negative 0.1%. Sterling was also whipsawed as it did take a brief challenge towards 125 before paring back. With the recent failure to that top side, the level of around 125.60.70 is still seen as a key point, and while intact, this is a potential shoulder, head and shoulder, and we do see a break that is around 123.10.15, a little bit lower than maybe some are calling, then we could see a measured move down towards the 120 region. Still, I would like to see a little bit more confirmation from the technicals to support this actual pattern. It's not the best of head and shoulders, but there is conversation about this, and so no doubt there will be eyes looking towards that neckline, which is anywhere from 123.10 to about 123.45. And talking of potential head and shoulders, we do have a shoulder and a head and awaiting a further shoulder to the right. Whether or not it emerges is another question. With the broader resistance seen around 2011-15, I do anticipate further weakness to emerge. And if that level does cap, then we could see a pullback towards the region of 1,958.64, which is my favourite call at the moment due to the technicals remaining somewhat heavy. Finishing up with oil with a level of 75.70.80. Failed to hold. We've completely filled this breakaway gap now, and now with the break to the downside on Wednesday exposes the region of 72.50.70. I do anticipate there is a bit of the bullish divergence here as well, that we will see a correction soon and look back towards either beyond 75 and maybe even up to $80. So I'm not going to get too negative towards the bottom side of the range in case we see this bounce. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report. And I do hope you enjoy the rest of the day.